Right now, at this exact moment, China is executing the largest wealth transfer in human history, and almost nobody is talking about it. While you've been watching headlines about tariffs and political drama, Beijing has quietly spent over $800 billion on something that will determine who controls the global economy for the next 50 years. I'm not talking about technology. I'm not talking about military expansion. I'm talking about something far more fundamental. They're cornering the market on the physical materials that make modern civilization possible, and the implications for your savings, your job, and the American economy are about to become impossible to ignore. By the end of this video, you'll understand exactly what's happening, why Wall Street analysts are getting this completely wrong, and what it means for your financial future. Let's dive in. Here's what most people don't understand. China stopped being just the world's factory about 10 years ago. That's old news. What they've become is something far more strategic and infinitely more dangerous to American economic dominance. They're systematically locking down the supply chains for nearly every critical material that powers modern technology. Think about your smartphone. The semiconductors inside require rare earth elements. Your electric car? It needs lithium, cobalt, nickel, and about 17 other specialized metals. Solar panels, defense systems, medical devices, aerospace technology, they all depend on specific materials to function. China isn't just buying these materials when prices are low. They're executing a comprehensive national strategy backed by state-owned enterprises and unlimited funding. Let me be crystal clear about the scale here. We're talking about rhodium for catalytic converters, palladium for electronics, platinum for medical equipment, rare earth elements for wind turbines and EV motors, copper for electrical infrastructure, lithium for batteries, cobalt for battery stability, nickel for steel production, and dozens of other materials most Americans have never heard of, but that our economy cannot function without. The evidence is everywhere once you know what to look for. Chinese companies are outbidding American firms for mining rights in Africa and South America. Their imports of industrial metals keep increasing even when their manufacturing output stays flat. They're building strategic reserves that dwarf anything the United States maintains. China already controls between 70 to 90% of global rare earth processing. Even when these elements are mined in America or Australia, they get shipped to China for processing because that's where the infrastructure exists. These materials, with names like neodymium, dysprosium and terbium, are absolutely critical for everything from smartphone screens to missile guidance systems to MRI machines. One country has near monopoly control, and it's not us. Now here's where this strategy becomes absolutely brilliant, and it's the part that Wall Street either doesn't understand or refuses to discuss publicly. Every single dollar that China spends buying physical resources is a dollar they're reconverting out of US currency and into real assets with intrinsic industrial value. Think about what that actually means. China accumulated massive dollar reserves over decades of running trade surpluses with America. We bought their products, they accumulated our currency. Now they're methodically converting those paper reserves into the literal building blocks of future technology and industry. It's one of the largest and most consequential shifts in economic power in modern history, and it's happening in plain sight while everyone's distracted by other things. Let me ask you a straightforward question. If you had $1 trillion in a currency that's being printed at record rates, what would you do? Would you keep holding paper, or would you convert that paper into physical assets that maintain value and provide strategic leverage? China chose option 2, and they're executing that choice with ruthless efficiency. The tariff policies implemented over the past few years have actually accelerated this trend in ways that probably were unintended. By dramatically reducing trade volumes between the US and China, fewer dollars are flowing into their economy through normal commerce. So what's Beijing's response? They're not panicking, they're adapting. They're trading less in dollars and increasingly in yuan with their global partners. They're using their existing dollar reserves to aggressively buy resources before those dollars potentially lose more value. They're building alternative trade and financial systems that don't depend on Western infrastructure. If you think this is just about economics, you're missing the bigger picture. This is about the fundamental structure of global power. The US dollar is already on track for its worst performance since 2017, declining more than 8% against a basket of major currencies. Now, when I say the dollar is weakening, I'm not talking about normal day-to-day fluctuations. This is a structural shift being driven by fundamental changes in how global trade works and how countries choose to hold their reserves. Currency traders on Wall Street, the people who literally make their living betting on these movements, are extremely bearish on the dollar right now for a very specific reason. Dollar down cycles that are driven by structural factors rather than temporary sentiment typically last 5 years or more once they begin. We've seen this pattern play out historically multiple times. This isn't a dip that recovers in 6 months. This is a multi-year trend driven by forces that don't reverse quickly, and we're only in year 1. If you're finding this valuable and you want to stay ahead of these trends before they become mainstream news, subscribe right now. I spend serious time researching these deep structural shifts that most financial media either misses completely or oversimplifies into useless sound bites. Click that subscribe button. It genuinely helps me keep producing this kind of analysis. Now let me show you a perfect real-world example that illustrates this entire story. Look at what's happening in the silver market, because it's a microcosm of the bigger trend. Silver prices have surged dramatically, trading well above typical ranges. If you had the foresight to buy silver at the start of 2025, you'd be sitting on substantial gains. That's not normal market behavior. That's a supply shock needing unprecedented demand. Silver has fundamentally evolved from primarily a monetary metal into something now classified by governments as strategically critical. Why? Because it's essential for advanced semiconductor manufacturing, solar panel production at scale, military defense systems, aerospace applications, and modern medical technology. Without sufficient silver supply, entire industries grind to a halt. Here's the supply-demand problem. Mining production isn't keeping pace with exploding demand from all these competing sectors. Too many buyers, not enough physical metal. Basic economics says prices rise, and that's exactly what's happening. But here's where it connects back to China. The single biggest shock to the silver market is coming from Chinese investors, both institutional and retail. They've figured out something that Western markets don't like to openly discuss. In paper silver markets, meaning futures contracts and ETFs, there could be significantly more contracts claiming ownership than physical metal that actually exists and can be delivered. Once you understand that reality, the rational response becomes clear. If you want actual silver exposure, you need physical metal, not paper promises. That's exactly what's happening in China on a scale that's creating genuine market disruption. Everyone wants physical metal. The demand has exploded to the point where we now have legitimate shortages developing in the domestic Chinese market. Here's how extreme this has gotten. Silver investment funds in China are getting massively oversubscribed beyond any historical precedent. Some funds have become so saturated with investor money that people are paying 50 to 60% premiums over the actual value of the silver held inside the fund. They're paying $1.60 for every dollar of actual silver value. Before I continue, I need to be clear. Everything I'm sharing is strictly for educational and informational purposes only. This is not financial advice, and I'm not a licensed financial advisor. You should conduct your own research and consult with qualified professionals before making any investment decisions. Financial markets are unpredictable, and past performance never guarantees future results. Now, obviously, that premium level is dangerous from an investment standpoint. If it collapses, investors face losses, even if silver prices stay flat. But here's what that behavior reveals. First, physical silver supply in China is extraordinarily tight. People cannot acquire metal through normal channels at reasonable prices. Second, investors are genuinely afraid they won't be able to acquire any silver in the future regardless of price. That's fear-driven buying, and it's a powerful force. Silver is just one example, one visible case study of a much larger phenomenon. This exact dynamic is playing out across multiple industrial metals simultaneously. It wouldn't surprise me if state-owned enterprises are quietly accumulating these materials in quantities that never show up in official statistics. This is strategic resource competition happening in real time at unprecedented scale, and most Americans have no idea it's occurring. Here's what this means for you personally. If you're holding significant wealth in dollars or dollar-denominated assets, the assumptions and strategies that worked for the past 50 years might not work for the next 50. It means understanding that real physical assets and strategic materials are likely becoming more valuable over time relative to paper currencies. It means recognizing we're re-entering an extended period where traditional safe havens might not perform as historically expected. It means thinking carefully about diversification, not just across different stocks or bonds, but across different asset classes entirely. The rules are changing, and the change is being driven by forces much larger than any single government can control. So let me know in the comments, will China's strategy ultimately succeed in reshaping global economic power? Can the dollar maintain its reserve currency status through this transition? How are you personally thinking about your financial positioning for what could be a turbulent decade ahead? These are literally the most important economic questions of our time. The decisions being made right now are going to echo for decades. If you found this analysis valuable and you think others need to understand what's really happening, share this video. Send it to friends, family, colleagues, anyone who cares about their financial future. Make sure you're resubscribed, because I am constantly tracking these structural trends and bringing you insights that mainstream media either misses or won't tell you. Thanks for watching.